Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar declined further overnight after prices fell to its lowest point since July the 18th at 77.98 before staging a mild recovery. Additional weakness emerged yesterday after a sharp increase in job vacancies in August. According to the Australian Bureau of Statistics, also the ABS, vacancies jumped by 6% to 203,700 in a seasonally adjusted terms, leaving them up a stunning 14.4% for the same period a year earlier. The current bear run that I'm holding towards 76.50 to 77.20 may gather further momentum ahead of the RBA next week. The RBA is looking to probably not change rates and to keep them at historic lows at 1.5%. The meeting is on Tuesday the 3rd at 2:30. It is regarded though that the governor from the RBA, Phil Lowe, may reiterate that a rise in global interest rates has no automatic implications for us here in Australia. So overall, any advances should fall towards 78.85.90, and I do expect to see further tests to the downside, keeping to my objective. Later today, we do have data release out of China for the Cajun PMI manufacturing for September. Last was 51.5, forecast 51.6. At one point, the US dollar looked like it was going to rally further yesterday as the market staged a high of 93.48 before dropping back. Now, in the next 24 hours, or should I say more to the fact, New York close tomorrow morning at 7 a.m., the dollar index needs to break above 93.30.35 and sustain the move to get any further momentum to the upside. If that's the case, then Euro should keep on its course and look down towards 116.85 to 117.05. Now, we did get a new low overnight of 117.20 before rebounding. But overall, since the rebound, I still believe that the market will fall above the 118 handle with a cap at 118.50, and intraday support comes in at 117.45, and still expect to see this level challenged around 116.85 to 117.05. Well, the dollar yen case clearly has retreated from the 113 handle for the second time, and now puts a question to the fact that we could be breaking down slightly towards 112.20 or 111.60, even though we did see a low of 24 today. It is viewed that if you do hold to the strategy of buying on dips, just be aware that if we get a break under 111.60, then that would give further case to the downside to 110.95. But I feel the market will hold around 111.60 and trade back towards the top side. Well, the pound was a little bit mixed overnight. At one stage, it did weaken on the back of the Bank of England Governor Mark Carney, who mainly steered clear of any suggestions that an interest rate hike was looming. But then the market did gather momentum after latest round of talks in Brussels of the Brexit departure, with the UK Davies saying considerable progress has been made on issues that matter. At this point, the market is contained at the resistance of 134.50, and while that does continue, then we should see a pullback with the initial target still holding to 132.60.65, given from the fact that the technical implications are bearish. On the day, though, the support comes in at 133.70. The gold outlook, a little bit mixed, but still was briefly underneath 80 yesterday, printed a low of 77 before rebounding. With the geopolitical tension slightly easing over the last few days with North Korea and the US, the market has remained focused on Janet Yellen after she recently gave a hawkish statement regarding the fact that in the next coming months we may be looking at an interest rate hike in December. With the chances now up around 80%, the market may at this stage keep a little bit of pressure on the downside. But if we start getting tension back with US and North Korea, then we would see a move back up towards 96 and maybe even higher if it's breached towards 1,316. The technical implications are showing slight divergence to the bull case, so I do expect to see prices to sustain above 75.82 in the next 24 hours. Silver also respecting the level of $16.60, and again there is some divergence here, so I expect to see silver probably take the step up first before gold and look towards a resistance of 95 and maybe up higher towards the region of 15.45. Any weakness should still find demand from 16.60. And to wrap up with oil, well, the market clearly rejected that level of 82.55.90 after printing a high of 94. From the pullback, we could see a move towards 51.35 to $50.80 a barrel, but do not at this point get too bearish until we get confirmation of a break of 50.80. Otherwise, we could see easily a rebound back towards the top side around that 53 handle. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great new day and a wonderful start to the weekend.